Well, Cigniti Technologies, that's a stock that's buzzing in trade on the back of their new base in Prague to help expand European operations. Well, to discuss this and what's the outlook for the remainder of the year, we're joined by Mr. Krishnan Venkatachary, the CFO of the company. Hi, Mr. Venkatachary. Thanks so much, sir, for joining in. Well, congratulations on, expanding base to Prague. Give us a sense in terms of what is the revenue potential that you see from them. And also, if you could give us a sense in terms of, for this year, what kind of a revenue growth is the company looking at on the whole? Is it double digits? If double digits, could you classify that mid or high teen? Please go ahead.
Sure. Good morning and thank you. Thank you for hosting me. Just a caution, my throat is slightly infected, so the voice could be slightly coarse. Okay, please bear with me.
Don't push yourself too much. Give us. Yeah. Go ahead.
Czech is a strategic location which we have picked up basically after carefully analyzing various parts of the Europe. Just to give a background to step back, I think we get from UK and Europe region about 11% of the total revenue for the company is contributed from there. Mm-hmm. And in that 11%, if you look through, basically, we have just bagged very recently, although I don't want to name it, a leading largest automotive client from Czechoslovakia. And one to benefit the client and also a win-win for both of us, basically. We chose that region because the region has got a natural German-speaking and English-speaking and available skilled resources, which also on a cost front is sub-UK and slightly off from India. But I think it will be a very good fit as a location. Okay. While that location acts for Czech as a center in terms of the client, it also acts as a near-shore center for many of the UK clients. Currently, we have a huge set of UK clients, and they are absolutely euphoric that we are able to open a center there, and they'll be able to visit there and work on the same time zone and have their set of people out over there, right, and things like that.
Mr. Venkatachary, we sitting here in Parel most definitely are, hoping that the next time we have this conversation would be somewhere around Prague. But
we're dreaming about it.
let's talk about, business.
We'll hold a board meeting there and invite you all there.
Oh, that'll be perfect. But if you could tell us a little about, the revenue outlook for this year. Last time you joined us, you did say you're looking at double digits. Can you specify whether it be low double digits, will it be mid-teens, high teens? And margins, last year was 16%. The first quarter fell to around 9% You're taking some price hikes also. I think your employees would be a happy bunch going to Prague, taking price hikes or getting employee, SOPs and all of that and stuff. So margin and revenue outlook for the year?
Yeah, I think you need to look at, I've already explained in the investor call in terms of why the margins dipped during the last quarter is that we have moved to an outcome-based winning of a couple of clients worth about close to $14-15 million, which involved about sizable 120-130 people to be done at a KT at a 3 months cost, which naturally had a dent and some expenditure which we front-loaded, including the increments. But I think if it comes back to, when you come back to that, all those has become billable now, and we are buoyant, and the margins have bounced back during July and August. But I think the exact numbers I won't be able to disclose being a listed company. But I think we are running very high on that. My utilization, which was offshore on account of this knowledge transfer, which is not considered in as a billing, basically, dropped down in offshore to about close to 75%, has now come back to 80%, which means that we have a sensitive analysis which says that how much it has contributed to the EBITDA in a beautiful way. We are off with that. We feel that it is an investment very clearly, and this investment in the business will be in different kinds, and this is one of the investments basically to win it from any of the competitors out over there. The second portion is that in terms of the growth, we are buoyant. We are extremely confident with the current set of order book, which is about internal order book about more than 120-130 million, and the way it's ramping up in a big way, and the bigger wins coming through, and the multi-year and multi-level contracts which we come through. We will be crossing high teens of a double digits very clearly of a confidence of that nature, basically. But exact numbers probably, I think as we start moving up and disclosing the quarters, we'll be getting it out. But I think we're extremely confident and bullish that we should be able to move out on that. And margins will bounce back to the last year levels, because this year is an investment year with a growth. Growth and the margins cannot grow in tandem. We need to sacrifice a bit on the margin, especially when there is a labor turnover and pressure which is available across the industry, and we are not an exception.
Okay.
Keeping that in mind, I think we are achieving a sustainable and accelerated growth in our 4-year journey. What we are thinking at is an $500 million, including both organic and inorganic put together. We are on a right path.
Okay, all right. And I think the outline that you had for the next 4 years is to become a $500 million dollar company in terms of revenues. Is that correct? And what about margins? They as well move to around high teens, I believe.
To be very clear that we have a target in mind to cross 20% out over there, and we have budgeted out in a much clean way. So we all have the binder document to run through, and we are working it out very clearly. We will be there in par with the industry standards out over.
When do you all get there?
It is a successive story in terms of year over year, in terms of how do we improve. I don't think we can just like that get up and run. I think we just need to give time.
Is it a 4-year time horizon?
5-year
time horizon?
4 years. Yeah, in the 4-year time horizon, probably every year a couple of percentage base point, 1%, 2%, I think start moving up. I think we are very confident that we'll be able to do that.
All right. You said that, in the last quarter, travel and tourism bounced back as a percentage of your order book, had fallen 50% last year. By when do you expect it to come back to pre-pandemic levels? And e-commerce retail, which is around 26 to 28% of your revenue, what rate is that expected to grow at?
E-commerce and retail, we see a lot of promising trend, and we expect that to grow clearly in the higher teens as we start moving up and expanding our operations. And as regards travel, we expect this year a marginal increase traces back to, for example, last year we did about close to 16%. We should be there doing about 20%, 18 to 20% this year. But I think next year is what we are expecting that industry to really ramp up with. I wouldn't call that pandemic moving away. We are used to the pandemic and the way of travel very clearly.
Okay.
So that's going to be.
Very quickly, you said that you all won 2 large orders, which are amounting to around $14-15 million. I think they had higher margins. When does that get executed? In the next couple of quarters?
It has started already.
Okay.
It started commenced from July in terms of billing all the set of people.
Okay.
In variable.
All right. So it'll be exhausted in the next couple of quarters. That's in FY22 itself. It'll be done.
No, it is a 3-year contract.
3-year contract. Okay. All right. Thanks a lot, Mr. Venkatachary, for stopping by, giving us all those details. So we'll track you on those numbers. You're expecting margins to improve from here, and high double-digit growth is what you're guiding for. The stock holding higher.
To you all to have a live feed in whenever you feel.
We'll look forward to that, sir. Look forward to that. Wishing you all the best for the remainder of this year, and please take good care of your health as well.
Thank you.
Well, on that note, though, let's move on. The Supreme Court is set to hear